Good morning, good afternoon, good evening, wherever you're watching this video. Welcome to this week. And right now, we'll be doing our weekly analysis for what we will be anticipating in this week. And remember, this is Tradehouse. Don't forget to turn on post notifications, subscribe to our YouTube page, like and comment, ask questions, and everything will be attended to. So let's get going to what we have in this week. And we'll be starting with the DXY, which is the US dollars index. And we know the role the US dollars index plays in analyzing the financial markets and how it helps us to look out for what we're anticipating in the dollars and against the dollars. So let's get going. This is the DXY chart, and for some time, price has been moving upward. Price reversed at this point, and we're currently at 103.432. This chart has already been marked, as you can see. Once it loads out, you'll notice it has already been marked. I'm anticipating some things to play out on the chart already. Has been marked. So we're just going to allow it load fully well before we continue. Yeah, so here is it. We're going to reduce this. So get a full view of what you're anticipating. So right here we have the DXY. At this drop, after this drop, price started moving sideways, though it was still forming lower highs and lower lows, but more like sideways movement. That's why we got this impulsive move right here. This impulsive move, corrective move, impulsive move, corrective move, impulsive move, and now we're anticipating the corrective for us to go lower. This is what we're anticipating in the DXY before we start looking out for how price is gonna push up from those points to this area where we have lots of imbalances and potential areas where the market will want to come to. Now, if we look out for what DXY has been doing, you'll know that this is an impulsive move. Let's go on the daily time frame. This is an impulsive move we had to the upside. We had this impulsive move to the upside and price tanked. So I'm going to take this as a corrective move. And before a corrective move ends, you see price begin to print pattern. If you're actually conversant with how the market moves, before a move come to an end, whether bullish move or bearish move, price begin to print what we call patterns. These patterns, sometimes you hear people call it reversal patterns, retail patterns, whatever they are called, or whatever you call it, but price begin to print patterns. And these patterns just help the market slow down, accumulate orders before the reversal finally take place. Also, the patterns help to trap traders that are not really experienced in trading the financial markets. So let's get going. Now I'm anticipating price to push up a bit before we get that drop to 9,800. Then before we get the move to around 109, of course, we have this imbalance right here that we're anticipating that price is going to fill. So for now, this is the long-term target. Now let's go back to our 4-hour time frame and to other lower time frames so we can get a better view of what we're anticipating price to do. Now, we already established that price is moving in a downtrend, lower low, lower high, lower low, lower high. And this is a lower low. We just got this lower high. And we're anticipating price to actually reverse from the 104 area, 104 area. That's why I'm anticipating price to reverse from. We have this liquidity area right here. And if we look really, really well, price is trying to make something that looks like another pattern, like a rising wedge, as a lot of people will call it. So I'm anticipating that this week we are going to see price complete this whole game right here. We're going to see price complete it before we get that drop. That is what I'm anticipating on the DXY this week. We're going to see price just keep accumulating orders, consolidating, trap the breakout traders, hit their stop losses before price is going to drop. And for traders who are already trading support and resistance levels, saying, okay, price already at this area, so anticipating price to already drop from this area. Your stop losses should be above this point, and price is going to hit their stop losses, triggering the buy side of things, and finally anticipating that price is going to tank. And our take profit levels are very simple, very, very simple and open. We have this open order right here with this imbalance. We have this liquidity level right here. No, price loves to go to liquid areas before we are looking at our final take profit at the 9800, which is, we have something we're actually looking out for there. That's why we want price to reach there. Another confirmation we are actually looking out for is more called divergence. If you are in Tradehouse, you have a better understanding of how we use divergence in the chart. But for the case of this analysis, I'm just going to do a very quick one. Divergence right here. From past stuff that have been happening in the chart, we will see that when price wants to reverse, it actually creates some divergence. When price wants to reverse, it creates some divergence. And now we are now seeing such divergence here already. And price just repeats itself over and over again. If you are smart enough, you just take advantage of the repetition price does. So right here, already seeing price trying to repeat what it has been doing before reversals occur. So what do? We just position ourselves because we've seen it before. It's most likely going to happen again. So position ourselves in case when it happens, we won't be missing out. So that is that for the DXY. Now, with what we've known in the DXY, that means we're anticipating to short the dollar. That means the dollars, we're anticipating that the dollar is going to lose strength this week. What does this simply mean in other currencies? That means pairs like USD CHF, USD CAD, UJ, and other dollar-based currency are going to go short. And dollar quote currency, GBP USD, Euro USD, AUD USD, NZD USD, they're most likely to be bullish this week from my technical perspective. Now, let's see why I say so. Let's go on to USD CHF right away. USD CHF. Now, after this drop, price started recovering. Price started recovering little by little, little by little. On the daily time frame, it is very clear that we're in a downtrend. It cannot be argued. We are in a downtrend. Whether somebody is buying this, I'll take it that the person is buying the pullback, but the fact still remain the fact. We're in a downtrend. Now, why are we in a downtrend? Can't you see this? All these lower highs and lower lows. We're in a downtrend, and there's something very uncommon that we don't use, but I'm going to use it here. Which is the trend line. Naturally, I don't like to use trend lines when trading or when doing analysis, but for some specific reasons, I use them when I'm trying to mark out for traps and other stuffs, I use the trend line. But right here, let me show you what I'm going to use the trend line for. This chart has already been marked. We are just waiting for price to get to our POI, then we strike. So for USD CHF, this is it. We've got two touches, 1, 2, and on price is at this point. Price is at this point. In as much as price at this point, a lot of traders will be looking to short from the bounce, the trend line bounce. And what do you think should be above the trend line bounce? Stop losses. Stop losses will be above. So personally, I'm not looking to use this trend line. I'll just use it to make sure that my entry doesn't correspond really with this trend line, because there will be a lot of trap there. A lot of stop losses will be hit, liquidity will be taken. So right here, what am I looking out for? I want price to hit at this level. This candlestick here is very important to me, because firstly, it's actually a deep retracement candle. If we were to cast our Fibonacci right here, we'll see that that candlestick is around the 71.8 to 78.6, which is, these are levels I love to take trades from. And now price is gravitating towards that level. So I'll wait to see how price reacts when it gets here. That is what I'm just going to do. Now let's go to the 4-hour time frame. The 4-hour time frame. Now we see we have an open order right here, a liquidity, order block, sorry. We had order block right there. And also we have price. Price is moving gradually towards that order block to mitigate that open order. And after that, I'm anticipating the drop. And this is actually really interesting, because this order block lines up very well with an institutional level, which is the 8900. The 8900, if you check it out, this is actually the 8900 area. So I'm anticipating price to reject at 8900. If you don't really know anything about psychological levels, it is best to check it out so you understand how to use it. So right here, I'm actually buying USD CHF up to this point to see how price reacts from this point. From this point, I'm going to sell. Going to sell down, because I'm just playing with the trend, or I'm trading in line with the trend, except there's a major break of this structure. Except there's a major break of the structure to the upside. That is only when my bias is going to change. Until I see a major break of structure to the upside, then I'll start anticipating for price to pull back for me to go higher. Otherwise, I am bearish on the USD CHF, and we just saw what DXY was doing, showing us that okay, we're anticipating a short. Automatically, I'm anticipating a short in USD CHF. Now let's check USD card and see what we have there. Let's check USD card and see what we have there. Yeah, what do we have here? So price is also gravitating slowly upwards. And we have this level right here. This is a very strong area. I don't know if price will have the strength to push to this point before it does anything, because price has been accumulating on the RSI. So I don't know if price has strength to push its way to the upside before we get that drop. I personally do not know, because a lot of traders are already anticipating to go short from this strong area, except price is going to give us like an internal structure manipulation. And let me show you what I mean by an internal structure manipulation. In as much as we have this high, at this point I was anticipating price to drop, but it didn't give me that nice close I was looking for. Now, in as much as we have this highs already established right here, price might do something. Price might not necessarily take out these highs right here, Rather, we might begin to see price consolidate sideways. Price might begin to consolidate sideways. Just do this, then take out this area right here before price tanks. So it is called internal structure liquidity because this top are still maintained. They have not been cleared. Price just created liquidity, trapped traders, and then did what it wanted to do. So we can actually see this, or price might just have the strength to push to the upside, and then we get that drop. Remember, it's all about grabbing liquidity. It's all about grabbing liquidity. That is what price just wants to do. It's all about where liquidity is and how much of liquidity is actually seated there. And this will drive price to actually go to that place. The next is USD JPY. You see, USD JPY is a very special pair because in as much as it has USD as its base, you have to trade it with some level of technical smartness. Otherwise, you're just going to get burnt trading USD JPY. So right here, price already dropping from where we anticipated it to drop from, but we might still see price push to the upside. Let me take this out. But I'm not convinced because this looks like a corrective pattern. So I am not convinced yet. It dropped, no doubt, but the drop is actually dull. It doesn't really look like a reversal drop. You see, when price is trying to reverse, check when price is trying to reverse. It is actually quick, it is smart, it doesn't waste time. But when you see price trying to move at an angle, you see, you need to learn to make use of your eyes because your eyes are going to see things. When you begin to see price move at an angle, then automatically it doesn't really look like a drop anymore. Something like this. Similar thing happened here. So as if we had this drop, then all of a sudden, there was no momentum behind it. And how did it end up? Pushed to the upside. So right here, I'm anticipating that price will even push to the upside. And if price should push to the upside, then I'll be willing to short from this point rather than this point. Why will I be willing to short from this point? Because at this point right here, if price should now push to the upside, we might get this, and this will automatically mean divergence for us. Automatically mean divergence for us, and then I'll be more than willing to short this, an elongated M, as some traders will call it. So I'll be more than willing to short this than I'm willing to take the risk in any short here because it doesn't look like it wants to short. Now, sometimes when the market is a bit confusing, it is necessary just turn your chart, flip your chart and look at the chart from the perspective of another view. Look at it from either a sell or buy view. If you are selling, look at it from a buy view. And if you should get that same perspective, then you should go with it. So right here, I'm still getting that same perspective. Yes, I'm anticipating that this is a corrective pattern, and a lot of traders will want to be buying this breakout, or in this case, selling this breakout. And now, before you know, here becomes what? Here becomes liquidity. This point becomes liquidity. It might not necessarily even go this far. It might just come here a bit. Then we get that very, very swift reversal. Then we get that swift reversal from those points. But all what I'm saying is price will actually just do what it has to do to trap people it must trap. And that is that for USD JPY. So the next we will be looking out for that appears on the other side where we have USD as the quote currency. So this for USD JPY. Now let's go GBP USD. I'm looking out just for 3 or 4 other pairs before we call it the GBP USD. Right here we have this pair has already been marked, and let's see what we are anticipating in this pair. Let's go to the daily time frame. It has been marked. It has been marked. Good. So we had price close like this last week. We had price close like this last week. And we have this liquidity area already. We have this opening. It hasn't been mitigated. So you can see my markup is slowly coming out. I don't know why it's delaying. Good. Everything is out now. I don't know. So right here, this is what I am anticipating. Liquidity already established. Liquidity already established. Equal low liquidity order block. And I'll take this as impulsive, corrective, and what? As simple as that, impulsive. After all, we've actually been in an uptrend. Very, very established uptrend. Very, very established one. Impulsive, corrective, impulsive. Yeah, a little corrective right here. So impulsive, corrective, impulsive. So that is that for GBP USD. You can, when you get on your chart, zoom out and look at the chart and see what I am actually looking out for. I'm anticipating price to actually drop from those points down here. So I'll only be interested in GBP USD when price is around this area. Aside that, I'm not really interested. Then the next will be Euro USD. You know, Euro USD is inversely correlated with USD CHF and the DXY. So we're anticipating that USD CHF is going to go up before it drops. So automatically we are anticipating that Euro USD is going to drop before it goes up. And as you can see, my chart is already marked also with what I am anticipating right here. I just want price to pull back. We have this liquid area. Price has been to before, like tested this area. And we know when price begins to gravitate towards this area, a lot of traders will be looking to buy at this point. And what would they have below here? Stop losses, liquidity. The market just keeps repeating these stuffs over and over again because, you know, trading is more psychological. That is why the market won't stop repeating the stuff because traders won't stop making the same mistakes. Traders won't stop being in their emotions. Traders won't stop being in their feelings. Traders won't stop being irrational. So the market keep doing this stuff over and over again, and traders are still getting trapped over and over again. So we have this liquidity area, stop losses below here, and I'm anticipating price to come down to this orange area because right here on the 3-hour time frame we have an open order. And you know, when there's liquidity, when there's a liquid area and there's an open order, this is more like a gold mine because price in the process of clearing this liquidity is going to tap into this open order, is going to mitigate this order, and we keep going up. And from our market structure, we are bullish. We're in an uptrend, impulsive, corrective, break of structure at those points, corrective, and up. And if you should cast your Fibonacci on this, you see that we're operating between the 71.8 and the 88.6. Right here, if you should do that right here, you see price reacted in between. If you should take this right up here, what are you seeing? Our entry is also in between 71.8 and 88.6, which just makes this stuff perfectly fit. Like it just makes this stuff so sweet. And the last but not the least is gold. It's gold. You see, we've been milking gold in Tradehouse, and this is a call. If you're not part of Tradehouse, it's important for you to just take that bold step, get into our VIP group so that you'll not miss out on these trades, you'll not miss out on these calls, because it's actually epic. Like, what is going on in Tradehouse is actually very, very epic. Now, right here, we have gold with us. And same, I am anticipating price to come in between the 71.8 and the 78.6. And last week, we called a short on gold right here. We called a short on gold right here, and we are still maintaining that stance. Price tapped into our sell area, which was called in our Telegram. And price dropped how many pips in less than, price drops over 175 pips. Now, price has pulled back, dropped, and we are going to see more drop into this area, into this green area. And from there, we'll look out for things, and we anticipate the bullish reversal on gold, because if we should honestly look at gold, gold is already accumulating. It's already accumulating, and this week we are most likely going to see that reversal. This week we are most likely going to see it. We are most likely going to see, sorry, I'm most likely going to see the reversal from gold. We are most likely going to see the reversal from gold. Most likely going to see a reversal from gold. The last but not the least is NZD-CAD. NZD-CAD, a trade was called on this pair in July 17th. And as we speak, the pair or the trade went ahead close to 400 pips. Yes, right here. Right here. This is it. This is it. We milked a lot out of this pair. So now we are actually allowing markets to breathe, so that we're going to see what price is going to do. I'm very, very confident that price is going to hit this 7,900. And from the 7,900, we're going to get bullish. I am more than confident that this is going to happen. And why am I very confident? Let me show you. In the overall move of NZD-CAD, after this impulsive move, whatever is happening here, I take it as a correction. So this is actually a swing trade we have in our hands. We actually have a swing trade in our hands. So I'm anticipating that price is going to push up to this point. Let's cast our Fibonacci on this. Yeah, just like before, as normal, in between 71.8 and 78.6. Now, our take profit level should be around minus 2,700. Fibonacci extension level. So if I should cast to measure how many pips right here, we're anticipating over 1,200 pips. We're anticipating over 1,200 pips. It is possible. It is very, very possible. So for this week, this is what we're anticipating. Lots of swing setups and other setups that we have will be shared. That is if you are in Tradehouse. But if you want to get our premium signals, then you can sign up to our signal group. And if you actually want to learn how to trade the way we do, Forex simplified, no gibberish in there, just straightforward to the point, then get on our Telegram, and don't forget to send a message across to us. We'll get back to you. Don't forget to like, comment, subscribe, turn on post notification, so that in case we post new content, you'll be notified, so that you can actually enjoy what we also know. Do have a great week ahead. Do have a profitable week ahead. See you later. Bye for now.